Good morning, YouTube. Back at it again. Another episode of The World is Burning. Shout out to the 771 subscribers. Love you all, guys. Keep the comments coming. Love hearing from the community. If you're new here, we're just covering the economic issues everyone's going through. I think the world's burning. I think you're kind of crazy if you don't think that right now. Today we're taking a trip over to the Far East, people. We're looking at China. Now, China, all the data that they give out, all the numbers, they're all bullshit, to be honest with you. I feel like they're just making it up as they go along, hoping no one notices. But they're in a rough spot. They've got a few things going wrong with the country and with the economy. I haven't seen this video, guys. I'll watch it first with you. I've been watching quite a few of these China videos. I think they're in a rough spot. Leave me a comment. What's your thoughts on the Chinese economic issues right now? Let's get into the video.
This is a chart showing the change in consumer prices in China. As you can see, those prices have been falling a lot. Many economists are concerned that China is slipping into a period of deflation, often an even worse scenario than high inflation. At the country's legislative session in March, Premier Li Qiang said Beijing would issue special treasury bonds to help stimulate economic growth. But some investors are skeptical it will succeed.
And that's the thing. The government and the reserve banks, they don't really have many tools to combat these issues. So what they're going to do is issue more treasury bonds, maybe print some more money. They're going to start doing all these things that mess with the supply, and then we're going to get into this artificial inflation/deflation situation. Got to keep your eyes on it, people.
Falling prices can be so dangerous, not just for China, but also for the global economy. To understand what's happening in China, let's look at Japan's recession in the 1990s, or what many call its lost decade.
Japan, in a way, is the poster child for deflation. This huge sort of bubble in stock market and real estate burst. Subsequent to that, the economy slowed down.
Prices fell, sending the economy into a deflationary spiral, which can be really hard to escape. That's because when consumer prices fall, people expect them to keep falling, so they're more likely to wait to make that big purchase until sometime in the future when it's cheaper.
And this is the thing, guys. You don't want to be Muggins, who's bought at the top, so you're going to ride it out. And then no one's buying things anymore, and the economy stops. It just stagnates.
Spending means that companies make less profit. That means they need less workers, so unemployment might go up. Spending gets even lower, prices fall further. So you get into this sort of vicious circle where prices and spending just sort of chase each other lower.
One example of this was the Great Depression in the US, where deflation led to slow economic growth, then a big rise in unemployment. Japan, where working-age population growth was turning negative, didn't really struggle with unemployment.
There's very strong social pressure on companies in Japan not to lay people off in the way that there isn't in the United States and lots of other Western economies.
Japan's lost decade is also commonly referred to as a balance sheet recession, a term coined by economist Richard Koo.
Which means, put simply, that everyone had kind of run up an awful lot of debt, particularly companies in the preceding, decade or so, and every penny they made went towards servicing that debt.
Does that sound familiar, guys? Does that sound familiar? Does that sound familiar? My God. It's just one big circle, people. We're going through all this as well. Japan went through it before. We've been through it before. China's going through it right now. It's this situation. And here's the people I feel for. The people who got baited in during the pandemic, paying way over asking price for houses, for cars. They're going to be upside down on all that stuff now, people. They're going to be upside down and they're going to be in a bad situation.
So companies stopped spending and investing. They stopped hiring.
The Bank of Japan tried repeatedly over the years to stimulate economic growth, from cutting interest rates to printing money. But nothing quite got the economy back to where it was.
And that's their two things, guys. They can cut interest rates and they can print money to try and artificially restart the economy. But all it does is drive prices up.
It took 34 years for its stock market to record a new high, and the country's GDP per capita has hovered around $40,000 for a long time. Some economists say it's hard to pin down whether deflation is directly responsible for Japan's slower growth. But
deflation is more of a problem the longer it lasts. It's a difficult problem to definitely identify until possibly it's too late.
That's what economists are afraid is happening right now in China.
The economy grew 5.2% last year. As far as China is concerned, though, it's not great. I mean, China typically grows closer to 6%, 7%.
Like Japan in the 90s, China is also experiencing a real estate bust.
The economy got to a point where it really relied on real estate investment. The government decided that it had enough of this because there was too much debt building up, and so they made a big effort to try and squeeze developers, property developers, access to credit, and that was in 2020. And since then, the property market has just kind of been in free fall.
Many households are seeing the value of their homes drop, which is driving down spending. But unlike
And if you look into China, a lot of people have money tied up in these real estate investments. It's one of their main financial instruments to invest in. A lot of these houses they weren't even living in, they were second, third properties. But especially if you want like a partner in China, you need to sort of have these things to sort of show your wealth. And all their money's tied up in this. And now it's crashing. It's a terrible situation to be in.
Japan, where real estate prices collapsed very quickly, in China, it's happening much more slowly.
One strange thing is prices haven't fallen quite as much as they ought to have, mostly because lots of local governments are propping them up.
And that's what I was just about to say, guys. The Chinese government, they don't believe any of the numbers that they put out. They're propping this up. They're trying to stop the wheels falling off this situation, because if the wheels do fall off, it's going to be a very bad situation. So yeah, the price hasn't dropped as much as they anticipated because the government and the local municipalities are propping it up.
Economists certainly say that what needs to happen in China to get a real resolution to the real estate crisis is a much bigger fall in prices so that people start buying these apartments again.
Economists are split on whether China's economy is just struggling due to some short-term factors and will soon work itself out, or if this deflationary trend is spreading.
Falling prices, you initially saw them very clearly in producer prices, so the prices companies charge to take things out of their factories. And then you started to see it in some categories of consumer prices, particularly things like pork, which is a big part of the Chinese diet and an important component of overall consumer price inflation.
Deflation in China isn't just a problem for China, it's also a problem for the rest of the world. Weak consumer spending in China means exporters have to ship goods overseas to find buyers, and that's led to the price of Chinese exports falling too. While cheaper prices are good for consumers, they're putting pressure on domestic manufacturers around the world, because China can produce a lot of goods more cheaply.
In Europe, for instance, there's a lot of anxiety at the moment over automakers. So Chinese companies are making a lot of cars, a lot of electric vehicles in particular, and they're making them cheaply and they're selling them all over the world.
In response, countries like the US are imposing trade barriers against Chinese exports. The type of bonds that China plans to issue as stimulus are typically reserved for economic emergencies. This is only the fourth time in the past 25 years that China has issued bonds like these. The fact that the 3 previous such bond issuances each followed an economic crisis speaks to the deep sense of urgency that officials are feeling right now.
They're very familiar with what happened in Japan and determined to avoid it. Whether they're taking the right lessons from it, I think, is uncertain. Japan, when it entered into deflation and stagnation, was the second largest economy in the world. China is the world's second largest economy, and to have that slide into deflation and stagnation would mean lower global growth overall. So it definitely is a problem for the rest of the world.
And we're all a global world right now, guys. We're all tied in together. So if China falls, I think it's going to set off a domino effect around the Western world. So yeah, guys, I'll leave it there for today. Leave me a comment. What do you think? Do you think this is the sign of things to come? It's not looking very good out there, I don't think. Give us a shout in the comments. Love hearing from the community, and I'll catch you on the next one. Bye.